you through all the stocks and news on the back of news floor and the back of technicals. And now on the technicals, we're joined by Ajit Mishra, who's the SVP Research Relegate Broking. Hi Ajit, thank you so much for joining us today. Ajit, your first stock for the day is Apollo Hospitals. Tell us what's, why are you, what is your sense on Apollo Hospital? Because if I look at the chart, Apollo Hospitals, that has been consolidating. So from here on, how do you see this moving?
Hi, good afternoon. So yes, we see that it's been almost a month now that the stock has been hovering in a tight range while maintaining above its medium-term moving average, that is the 100 days of expansion moving average on the daily charts. But if you see that, the price action from starting from the beginning of the year seems like a formation of a reversal pattern or a continuation pattern, which is cup and handle pattern. And if we see the theme in totality, means this entire space, hospital-related stocks, be it Apollo, Fortis, Max Healthcare, NH, all these stocks are buzzing in the trade. So we believe that in the next move, probably we can see a similar kind of attraction in Apollo Hospital once this stock crosses 7100 mark. So it's a good area to accumulate the stock. We believe that 6800 should act as a strong support now. So in a market like this, wherein we are seeing excessive volatility, one can consider Apollo Hospital for fresh buying with 74,000-7500 as a position targets.
We'll see levels of 7,400, 7,500 on Apollo Hospitals. That's the view coming in from Ajit Mishra. But shifting focus to crude-related stocks, all of these oil marketing companies and oil refiners are in focus today on the back of that 7% surge that we have seen in oil prices. Although oil prices have recovered a tad bit, they are still trading above that $73 per barrel mark. Remember, JP Morgan says that oil prices could cross $130 per barrel if the geopolitical tensions continue to escalate going forward. Now, because of this, oil marketing companies are negatively impacted. So likes of HPCL, BPCL, IOCL, all of them are reeling under pressure today. But oil refiners, the likes of Oil India and ONGC, are positively impacted on account of that move. So we have Oil India trading with some marginal amount of gains today, but oil marketing companies in focus and bleeding in trade today.
In keeping with the crude oil prices that could surge further due to concerns over oil supplies and probability of US stepping into the Israel-Iran conflict, says Richmond Harris. Also adds that the energy market could remain rather unstable. Let's go across and listen in to what he has to say.
I think one escalation could be if the Iranians do decide to see if they can choke off oil deliveries out to the Arabian Gulf, then I think the Americans will step in. Because it's important for the world, and I think the Americans do see it as part of their holy mission to keep that Gulf open. So I think that if you're looking at oil prices, they're likely to be quite volatile because you've got these different factors involved. But I think at the end of the day, the US will look to keep it open. Whether that will then cause a secondary dispute between the US and Iran, well, that's probably going to happen anyway. But I think that'll burn at a lower level.
All right, that's Richard Harris weighing in on how the crude prices could move on account of geopolitical tensions. But let's get back to all the stocks that are in focus today. Torrent Power is another name that's in focus. Now, Torrent Power subsidiary company Torrent Green Energy Private Limited secured the SECI award for 300 megawatts ISTS connected wind projects at 3.9 kilowatts under a 25-year contract. And the cost of this project is likely to be around 2,650 crore rupees. On the back of this order win, Torrent Power is in focus today, has given up those morning gains, but nonetheless holding out in the green with gains of 0.5%.
Okay, so that's Laurus Labs for you. But shifting focus to Divi's Laboratories then, Ajit, tell us why is the stock on your radar this afternoon?
We are seeing mixed trend within the pharma space, but Divis is among the consistent performer, means the stock is still quoting around the record highs. Of it, we are seeing a marginal consolidation, a pullback around the short-term averages. So considering the overall tone, texture, and the prevailing market scenario, it's prudent to stick with the names selectively from the defensive basket also. The div fit the bill, and we believe that this zone close to 6500 600 is a good buying area, and with the potential of stock inching towards 7,000 plus levels in the near future. So here we see a buying opportunity, around the current levels, and one can add more in case if it slips below 6,500 mark, with 6,400 as a stop loss and 7,000 as a positional targets.
All right, moving on from DV's Labs to the next counter that is in focus today, Bank of Maharashtra. Kanishka, tell us what's the news flow on Bank of Maharashtra?
Right, Bank of Maharashtra has actually reduced its interest rate by up to 5 basis points on retail loans, including home, car, education, and also other links, loans linked with the repo rate linked lending rate. Now, the interest rate reduction by this Pune-based lender is in line with the moderation that was done by RBI last week, and the new rates are effective from June 10th. Now, with the rate cut, its home loan now starts at 7.35%, whereas the car loan that will start from 7.7%, which is among the lowest interest rates in the bank industry as of now. Following this move, the stock, however, is down about 1% in trade today.
Bank of Maharashtra in focus on the back of that, but Ajit, you clearly have a whole host of pharma stocks on your radar this afternoon. We just discussed Divi's and now Glenmark Pharma as well.
That's right. So, Ashisha, in a market wherein we are seeing very less stocks showing consistency in the trend, means we are seeing that on the rotational basis every now and then, almost all the sectors, barring FMCG, they have participated in the move so far. But when it comes to pharma, we have very select few names, where we are seeing consistency in the trend. So, apart from Divi's, Glenmark, it has witnessed a year-long consolidation range breakout, and it's been steadily inching higher from the last 1 week. Despite all this negativity that we are seeing in the market, today is still quoting around the day's high, 1.5% kind of a gains with decent volumes. So we believe this momentum is here to stay, and gradually the stock can inch towards its record highs, means 1,800 plus levels. So here one can accumulate Glenmark also at the current levels with 1,570 as stop loss.
All right, so that's Glenmark Pharma. On the charts, coming to you, Rabinder, NTPC is a name that you have picked out. Tell us, why have you picked out NTPC for us?
Well, as NTPC informed that the completion of trial operation by 660 megawatt capacity units of BARH Super Thermal Power Project Stage 1, and with this the total installed capacity of the NTPC on a standalone and group basis has become 60,926 megawatt and 82,028 megawatt respectively. But the stock is not reacting, but the stock is reacting oppositely, and the stock is down approx 0.5%, but it has shown a good recovery from the day's low, and the stock has recovered approx 1.5% from the day's low, but still trades in the red.
Okay, but shifting focus then to Dixon Tech, then Ajit, although this has been a wealth creator for investors, the stock is down nearly 20% on a year-to-date basis, currently at 14,292 odd levels. Where do you see the stock headed from here on?
Yeah, so Sisha, Dixon is basically currently trading at a very critical juncture, the long-term averages on the daily chart. So it's not that it's testing this average for the first time this year. In past also, we've seen a brief decline below these levels, followed by a rebound. But this time around, the kind of consolidation that we are seeing in the last 7-8 trading session, this indicates possibility of further decline or more pain, maybe closer to around 13,200 to 12,600 is something that the stock might witness. So considering that, those who are sitting on the long positions, especially, they should at least reduce their position right away and maintain a stop loss at 13,800. In fact, one can look to go short also if somebody is okay taking aggressive positioning with 15,000 as a stop loss and 12,600 as a target.
All right, that's Dixon Tech on the charts, but Kanishka, Bajaj Finance is the name that you have picked out for us. Tell us the news on Bajaj Finance.
That's right. Bajaj Finance is in focus because it has cut deposit rates for the third time since the beginning of 2025. It has slashed the deposit rates by 60 basis points, reduced the extra benefits for senior citizens to 35 basis points from 50 basis points earlier, and also done away with the special tenures of 18-month and 33-month deposits. Apart from that, today also marks the last session for investors to buy shares of this particular counter to qualify for receiving bonus shares before the stock goes to exit record date.
Now, the record date determines the eligible shareholders who will receive the bonus. Now, Bajaj Finance Board had earlier announced a 4:1 ratio of bonus. Now, against this backdrop, the stock currently is down about 0.5% in trade.
Bajaj Finance in focus on the back of that news piece, but IHCL Indian Hotels. Ajit, where do you see the stock headed?
So we were seeing very tight range consolidation for almost a month while holding over these major averages. But now we are seeing early sign of distribution or a breakdown in this stock. Means the stock has slipped below its long-term averages in today's session. And the way we are seeing, the volumes also inching higher, with the breakdown. Probably we can see this, consolidation to end with a breakdown and possibly a retest towards 680, 670 area. So again, the recommendation is here to liquidate your position, long position if you are sitting or waiting for a breakout, because indications are in the favor of otherwise. And in fact, one can look for a short position also with 755 as a stop loss and 680 as a position target.
All right, that's Indian Hotels on the charts. But tell you what, let's move a bit of a focus to the primary market action that's coming in. We have the management of Oswal Pumps that is going to start. It has opened up for subscription for today, and it will last till the 17th of June. Then remember this IPO. It has a total issue size of 1,387 crore rupees, out of which the fresh issue is going to be 890 crore rupees and an offer for sale for 497 crore rupees. And the price band is 584 rupees to 614 rupees per share. So that's the price band, and this IPO has opened up for subscription today. Is going to last till 17th, and we have Vivek Gupta, who's the chairman and managing director of Oswal Pumps, Subodh Kumar, chief financial officer of Oswal Pumps, joining us. Hi, good afternoon to both of you. Thank you so much for joining us. Vivek, let me come to you first then. Now, with the PM Kusum scheme, which currently accounts for 87% of your revenue, is due to expire next year. What is your detailed plan to replace this substantial revenue source, and how confident are you that the company can secure new projects and maintain its growth trajectory post 2026 without this critical scheme?
Definitely, by choice, we are continuing this PM Kusum scheme one because it's a huge opportunity out there. But definitely, we have lots of range, diversified pump business. We are into exports as well as we have a very big network. And presently, due to solar demand, we are losing our. We are not able to supply export markets and private market, because lots of, and our priority sector at present is solar market. So definitely we have lots of plan to, if any problem came in this scheme, which is definitely not expected. So we have we are thought there won't be any problem for any growth of Oswal Pumps.
Okay, so that's as far as the revenue outlook is concerned. But Vivek, despite reported rise in profitability, your actual operating cash flow was negative for the first 9 months of FY25. How do you explain the significant disconnect in profitability versus cash flow generation? And what specific actions are you taking to ensure that the sharp rise in revenue translate into positive cash generation rather than just paper profits?
Okay, if you see our last balance sheet, so we started in the current year direct government business. So government business working this receivable cycle is around 140 to 150 days, and definitely in coming years, government is thinking to reduce this payment cycle very aggressively, because for this solar pump installation, government want to install very aggressively and very big way. So definitely we are very sure about this receivable cycle. It will come down very drastically, and definitely in near future, we are going to our export market as well as the private market. So cumulatively, with this effects also, this receivable cycle will be come down, because it's the first year we entered into government business. That's why this receivable cycle you are looking for.
Right. Also, considering the combination of negative or operating cash flow, extended receivables, and an impending expiration of your primary revenue scheme, some might raise concerns about the company's long-term financial stability. So what's your message to the investors and shareholders regarding the company's strategy to overcome these significant challenges and ensure its viability beyond the current government initiatives?
Will let you know about that negative cash flow. So first I will explain you why this is looking at. So as Vivek sir, our debtor realization period is increased from last. If you compare with the last year, so it was 91 days. Now it increased to 140 days. And one first of reason is this, and the second reason we are growing expandingly with the tailwind of this PM Kusum schemes. So now our revenue is approximately 1,065 crore compared to last year's. So that is a operation growth is there, and because of the debtor realization period, slow debtor realization periods, the cash flow is slightly looking at negative. But if you look out our proceed which we are getting from the the market, which are from the capital market, we infuse 313 crore to repay our working capital debts. So this also generate the cash flow in the company, and in future near future definitely you will see the positive cash flow.
And even then we will have around enough cash flow because 200 crore we are getting for GCB purpose. Yes. And even then in the coming quarters, government is getting healthy cash flows. Exactly. So definitely we are very sure in coming time this cash flow will be highly positive.
Yeah, this is the transitional. Yes.
Vivek and Subodh, thanks so much for taking your time out and joining us here on ET Now. So all eyes are on this particular IPO, and primary market in any case is abuzz over the last few days. We will slip into a very short break, but we'll discuss many more buzzers on the other side of the break. Don't go anywhere.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड।
In an upward trend, it is heading towards its 52-week high, is it?
Yeah, that's right. In fact, the stock is trading at the record highs, and it's been almost nearly like 2-3 years consolidation range that it has ended of late, and since then we are seeing this positive tone continuing. And if you see that the banking as a space also, we are not seeing any major decline. It's just that we are seeing correction in most of these PSU's names. But Indian Bank on the other hand is holding strong and inching higher with every passing day. So I believe that the sector outperformer or the stock which is showing relatively higher strength will continue to outperform in the good market scenario also. So here one can accumulate at current levels, add more in case if it sees any dip around 600, and for the entire position one can maintain a stop at 575. Upside 700 plus level is something that one can maintain as a positional target in next 1 month.
That's the view coming in on Indian Bank, but NBCC, why is this stock in focus today, Rabinder?
Company has received different work order for construction from Navodaya Vidyalaya Samiti, and the cost of the order is approx 520 crore. But the stock is not reacting on the basis of news, and the stock is down approx 0.3%. But it has shown a good recovery from the day's low, and the stock has recovered more than 2% from the day's low, but still trades in red.
Alright, moving on then from NBCC to Wipro. Kanishka, tell us for Wipro, what is the news?
That's right. Wipro actually released a report yesterday highlighting that US insurers plan to more than double their AI investments in the next 3 to 5 years. This is to enhance underwriting, risk assessment, and also customer experience. Now, following this report that came yesterday, the stock is up about 0.2% in trade today in an otherwise negative trend in the market.
Okay, so Wipro holding up in an otherwise weak market, but HUL, Hindustan Unilever, that's the stock that you picked up for us. Ajit, tell us, what do charts indicate for this FMCG major?
So, if you see that there's one sector which has been consistently underperforming, and that is FMCG, means in the entire run, we hardly saw any participation. If we exclude a couple of names like Britannia and Marico, majority of the stocks, they are dealing under pressure or seeing consolidation. HUL has recently made an attempt of recovery, but it couldn't surpass the major hurdle of the long-term averages and formed a fresh shorting pivot. So we believe that there could be a possibility that the stock might inch towards its previous swing low close to around 2150. So here it's offering a shorting opportunity with stop loss at 2400.
Really timed out on this edition of Market Fatafat. Ajit, Rabinder, Kanishka, thank you so much for taking the time out and joining us and giving us all the stocks in focus today. But moving on to the fact that the government has proposed amendments to electricity rules 2005 in order to make energy storage system investor friendly. My colleague Prakash Priyadarshi is joining in with the latest on this story.
The government will make certain amendments to the electricity rules 2005, a very significant development coming in. In fact, the process has been initiated and the Power Ministry has prepared a proposal where certain amendments will be made to make energy storage system more investor friendly. In fact, the Power Ministry has sought comments from agencies, discoms, industry and exchanges. Along with that, comments have also been sought from power PSUs and private companies as well. As per the proposal prepared by the Power Ministry, the energy storage system shall be utilized either as independent system or as part of generation, distribution or transmission. It can be developed, owned, leased or operated by independent service provider as well. In addition to that, option will be provided to sell or lease or rent out the storage space in whole or in a part to the consumer. A very significant development coming in, and that's going to be very crucial for the growth of renewable energy sector, as investment in energy storage system will be very crucial. Therefore, the government is providing its impetus. In fact, the government has planned to develop 60 gigawatt energy storage system by financial year 2032, when an investment of rupees 5 lakh crore expected in the sector.
Prakash, thanks so much for joining us with all those details. But that's all the time we have on this edition of the show. Nifty now 170 points lower, but all the market action will continue on the other side. Don't go anywhere.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।